In the overview of all chapters of CAMS study guide. We hope that those who are preparing for the CAMS exam or who are thinking of attempting this exam will find this video very useful. This first part of video series will give you information regarding what is covered in chapter 1 of the CAMS study guide and what are the important things that you need to focus here. In this video, we'll also share you some tips and tricks that will help you to prepare this exam effectively and efficiently. Let us begin. This chapter begins with the definition of money laundering and its stages, as well as a small introduction to terrorism financing. You need to be very clear about what money laundering means. It is not just about converting illegal money to legal, but it is more than that. Also, you should be able to distinguish between the three phases of money laundering. Sometimes techniques of money laundering in these stages may be same, like buying real estate may be used in a placement phase as well as integration phase, but the distinction in the phases depends upon the situation. Then the chapter moves on with explaining adverse economic and social consequences of money laundering, which most of us know by now because of various adverse news regarding the money laundering and terrorism financing that we have heard or seen in the media. So there are no surprises here. This section is quite straightforward. Now we have come to an important section of this chapter, which talks about the methods of money laundering. Different financial institutions, non-financial institutions, and non-financial business profession either have introduced different products that are vulnerable to money laundering, or these institutions by themselves can be used as a vehicle for money laundering. Let us take an example of financial institution, which usually provide correspondent bank services to other banks. The money laundering risk here is that they know their correspondent bank with whom they are dealing, but they are unknown of the individuals or parties on whose behalf this correspondent bank carries transaction. Similarly, non-financial institutions like third-party payment processor handles the transaction on behalf of their merchants, but they are unaware of their customers. Further, non-financial business professions like real estate, casinos are more susceptible to money laundering than any other. For instance, real estate has a escrow account, which is like a pooling account where all buyer deposits their money, so that it becomes very difficult to trace a particular transaction. In this small video, we cannot cover all the facts, but you have got the general idea. The best approach here is to focus on the money laundering risk present in these entities and focusing on the mitigants for it. Next, the chapter follows to explain money laundering done through trade finance, which is mainly through the letter of credit. If you have a good concept of letter of credit, then you will have no trouble in understanding these money laundering techniques. The next part is about rising money laundering risk in new payment product and services like prepaid cards, mobile payment, virtual currencies. This may be little complicated if you don't fully understand about these products. Therefore, now it is a good time that you refer to Ulsberg principles, which explains what these products are, what are their money laundering risk, and how it should be mitigated. The link for the Ulsberg principles is given below. We Risk Simplifier team believe in simplicity. We have prepared study notes for this chapter in such a way that it will be easy for you to follow. It consists all the section of the chapter, and for each section the important component is highlighted. Also, it contains reference to FATF recommendation, Ulsberg principles, Wikipedia and other resources where it is necessary to make the concept clear. This will help you to save your time and effort by focusing on relevant materials only. For better understanding, it is advised for the first time you should read these study notes with your CAMS study guide. These study notes can be purchased by following the link given below in the description section of this video. Moving on, next section provides you with the information regarding various types of legal companies like limited liability companies, private investment companies, international business corporation. The important thing to consider here is that these companies are usually formed to hide actual beneficial owner, which is usually a natural person. This is usually done by creating a complex ownership structure or creating fictitious companies known as shell or self companies. You will also be introduced to the concept of a bearer shares. The last sections deal with terrorist financing. Here you should be aware of the difference between terrorist financing and money laundering, which is mainly the purpose and origin of funds. Terrorism financing is usually carried for an illegal political purpose, and the source of money used in terrorist financing may be from a legitimate sources like a donation. But be aware that the techniques used for money laundering may also be used for terrorist financing. Then after, it goes on explaining about various channels used to fund terrorists like Hawala or Hundi system, use of non-profit organization, and another mediums like crowdfunding. It also provides you with the techniques to detect terrorism financing. That's it for this video. In the next video, we'll talk about different guidelines imposed by different organizations like FATF, European Union, Basel Committee, as well as regulations imposed by US Patriot Act, OFAC regarding anti-money laundering and terrorist financing. Therefore, be sure to subscribe to our channel so that you will not miss any notification regarding our upcoming videos relating to the overview of the chapters of CAMS study guide. Trust me on this. You don't want to miss any of these updates, so please hit the subscribe button now.
Of CAMS study guide. I hope that those who are preparing for the CAMS exam or who are thinking of attempting CAMS exam will find this video very useful. The first video in this series gave you information regarding what is covered in chapter 1 of CAMS study guide. Now we'll focus on chapter 2 of the CAMS study guide. Along the way, I will share you some tips and tricks that will help you to prepare for this exam effectively and efficiently. Let us start. This chapter begins with explaining the core concepts of Financial Action Task Force or FATF. FATF is a global standard setter in anti-money laundering and terrorism financing. This section starts with explaining what does FATF means, what are its objectives and main activities. You need to remember evaluation criteria that FATF follows while granting membership to any country. Then this section explains the major highlights of previous and updated recommendations. We suggest that if you have never gone through FATF recommendation, it is about time. The thing that you should remember is FATF recommendation is not only useful for this chapter, but the majority of concepts of CAMS study guide has derived from FATF recommendations. Further, you should also be aware of the criteria on the basis of which FATF classify a country as a non-cooperative countries. Previously, it was known as high-risk jurisdiction. Next is about Basel Committee, which is a global standard setter for the regulation of bank worldwide. The main point to focus here is that it has introduced different principles and paper at different timeline regarding various provisions of anti-money laundering and combating financing terrorism that financial institutions should apply. For example, the main highlights of the paper introduced in 2001 by Basel Committee talks about 4 elements of KYC program. They are customer identification, risk management, customer acceptance, and monitoring. It also talk about three lines of defense that you might already know. Now we will talk about European Union directives on money laundering. There are four directives altogether. You have to focus on major requirements that each directive introduces because CAMS exam will focus on that. Like for example, the third directive extended the requirement of CGD and STR reporting to trusts, company service providers, life insurance, dealers selling goods for cash, which was not applied previously. Moreover, most of you already know that European Union directives are enforceable to all European Union states. Let us now talk about 9 FATF style regional bodies who are recognized by FATF and whose main objective is to combat money laundering and terrorism financing risk for effective anti-money laundering and combating financing terrorism system. The important thing that you need to focus here is that what is the unique feature these regional bodies possess. If you look at objectives and scope of these regional bodies, they are almost same. So you need to focus on distinguishing characteristic like which one is voluntary or mandatory, which geographical region they cover, what are the special purpose which lead to establishment of this organization. Now we have come to another important section, that is Ulsberg principle. This chapter talks about few major principles of Ulsberg relating to private banking, correspondent banking, transaction monitoring. This section only explains in abstract about major component of this principle. For better understanding, please look at the whole principle that can be downloaded from the Ulsberg official website. The download link is given below in the description section of this video. Moving on, this chapter talks about the major provisions regarding anti-money laundering and terrorist financing introduced by World Bank and International Monetary Fund in their different papers. As for example, in April 2004, they adopted a pilot program in adoption with FATF which put an end to FATF's practices of publicizing non-cooperative countries. Be aware, in this chapter there are a lot of provisions introduced by different organizations in their white paper or conceptual papers that you need to remember. This is further complicated by the fact that all these provisions look similar in one way or another. The best option that you can opt is to create a chart with the name of entities and their published papers, along with the date dictating those provisions. You can do this by yourself or by our study notes for this chapter, where these things are done for you with appropriate reference to FATF, Ulsberg and other resources where necessary to clarify the concept. For the first time, you may want to read these study notes in conjunction with study guide. But rest assured, you will find this study guide an effective tool for saving time and effort in your endeavor to pass CAMS exam successfully. The final section is very significant part of this chapter, which is related to US Patriot Act, OFAC and other US laws. This section has a various quotation from the act that you need to memorize. For instance, Section 313, Prohibition on correspondent accounts for foreign shell banks, which require banks and security brokers to obtain certification from foreign banks who need to certify at least once every 3 years that they are not themselves shell banks and that they do not permit shell banks to access to the US correspondent account through a nested correspondent relationship. There are specific requirements for each section that you need to be very clear. This is not important for your exam purpose, but also in your day-to-day job if you are already involved in AML safety, trade finance, treasury, or remittance area. That's it for this video. I hope you have found this video useful. In the next video, we'll talk about summary of chapter 3 of CAMS study guide, which is a very important chapter of CAMS study guide because of its length and important content. Therefore, please hit the subscribe button now and never miss an update about upcoming videos. Welcome to our third video in 4-part YouTube series regarding the overviews of CAMS study guide. We are now reviewing the most important chapter of CAMS study guide. This chapter is important in the sense that it provides a guideline on how to establish effective and efficient anti-money laundering and combating terrorism financing program in any organization and how to identify red flags for different types of money laundering and terrorist financing activities. Therefore, please watch this video till the end. Before we start this review course, we like to express our gratitude to all our subscribers without whom we could not have imagined existence of our YouTube channel. We hope for continued support from you, and also we want to heartily welcome our potential new subscribers to help us grow so that we would be motivated to upload these kind of educational videos that will help hundreds of others who will watch these videos and learn from it. We Risk Simplifier team believes in our core that knowledge can empower people, so it should be shared as much as possible. Let us begin by talking about risk-based approach, which simply means that those areas which are more risky should be given priority. This section talks about why the risk-based approach is more preferable than other checklist approach. Further, this section explains what are the risk categories, how to develop the risk profile of customer based on different categories like customer nature, product and service used by customer, geographical location of the customer. Risk profile can be done with the help of risk scoring matrix where all the aforementioned categories are given certain numeric value to calculate the risk. Moving on, we'll talk about the AML safety program, which is composed of 4 main key ingredients. Every AML safety program should start with proper AML safety policies, procedures, and control, which provide the framework within which all AML safety functions should be carried in any organization. Next, to implement these policies and guidelines, every organization needs a designated compliance officer who has appropriate authority and responsibility. There are various duties that she need to perform. After this, you need to educate your employees, different stakeholders through AML safety training. This should be a regular process, and the content of training materials should be different as per targeted audiences. That is to say, lower level employees will receive training about a different concept of AML safety than the executive level of employees. The final component of AML safety program is independent audit, which ensures that AML safety program is effective and any loopholes in that program will be identified and corrected. Now we will discuss the important part of KYC, which is customer due diligence. There are different elements of customer due diligence that you need to know, starting from customer identification to their profiling, transaction monitoring, and finally documentation. You will be then informed about enhanced customer due diligence. The main difference between standard and enhanced due diligence is that you need to collect additional information from the customer to prepare a customer profile. This information will include, but not limited to, supporting documents relating to source of income, nature of business, area of residence, and so on. The next part is related to sanction. This section will describe 3 different types of sanction. They are targeted, sectoral, and comprehensive sanction. The comprehensive sanction is severe one, as it prohibits all trade financing activities for a particular nation, whereas sectoral sanction prohibits certain kind of financial dealings, and targeted sanction are for specific individuals like named terrorists and criminals. There are different sanction lists developed by EU, UN, HMT, and other nations. Continuing, we'll talk about screening of politically exposed person. The only effective tool available for this type of screening is having a good database of PEPs so that customer names can be screened against this database to identify PEP. Another important part of KYC is Know Your Employee program. It is not only sufficient to know about your customer, but you need to be aware of your employees. Therefore, background screening is important at the time of hiring any employee or when there is a change in job role or at the time of promotion, so that organization can be assured that the right kind of employee is being employed who don't have any kind of shady criminal record. Also, reference checking is must so that the organization can know under what terms the employee has previously resigned from his or her job. If he or she was forced to resign, then your organization may want to explore the reason for that. The final section is about suspicious transaction monitoring. Organization can use automated monitoring system which will provide the options of generating red flags based on different scenarios, developing transaction history, facilitating automated reporting. You have also an option for setting risk parameters for risk profiling. The automated system also provides with workflow feature which helps to build a case on suspicious transaction and forward it to concerned person for monitoring and reporting. Then after it goes on explaining what are the red flags that you need to watch out to identify different types of unusual customer behavior, unusual cash transaction, unusual non-cash deposit instruments like checks, unusual wire transfer, unusual safe deposit box activity, unusual activity in credit transaction, unusual corporate account activity, unusual trade financing transaction, unusual investment activity, unusual employee activity, unusual activity in money remitter, currency exchange house, unusual activity for virtual currency, unusual activity in an insurance company setting, unusual activity in broker setting, unusual real estate activity, unusual activity for dealer of precious metals and high value items, unusual activity in trade based money laundering, unusual activity indicative of human smuggling, unusual activity of potential terrorist financing. This section provides the list of red flags that might indicate different types of suspicious activities. The list of red flags is very long, therefore, it is advised that you only focus on those things which you find confusing or unique and completely ignoring familiar ones. In this way, you will have a lot less to remember. Knowledge can empower people, so it should be shared as much as possible. We'll start by discussing how does the financial institution starts financial investigation based on information received from transaction monitoring, search warrant, referral from customer service staff, adverse media, etc. After the receipt of such information, institutions should investigate by reviewing documentation and contacting relevant employees. It may also take the help of internet to search for needed information about customers and their business. This section provides very useful tips on searching for information on the internet. After the necessary information has been collected, you need to determine whether based on that information should you file STR or not. Even though it is not decided to file STR, the reason for the same should be documented. The major point for all this is to ensure that only quality STR is filed to FIU so that law enforcement can find the information useful and can act on it. Main thing is that everything needs to be documented. After filing STR, the organization can decide on closing account if the reported account raises serious suspicion and there is possibility that it may lead to a huge reputation risk to the organization. Also, the organization may want to follow up FIU on their STR filings, asking them to look on that STR if the issue is grave. Another flip side of the coin is that investigation may be initiated by law enforcement against the financial institution. This is very serious. So the organization needs to be very careful in this regard because law enforcement can take legal action if the institution has made serious lapses like not reporting money laundering activities timely or did not maintain a comprehensive AML safety program and other intentional wrongdoings. Therefore, a financial institution should carry out its own internal investigation after receiving subpoena or warrant from authorities. They should collect necessary information about customers, movement of money, and contact involved employees. They should provide full cooperation to authorities but may want to take counseling of their legal department before sharing the requested information. They may also want to prepare employees before being interviewed by authorities. It is well known that investigation from law enforcement will always bring negative publicity, so organization spokesperson should effectively communicate with media such that organization goodwill remains intact. Finally, this chapter ends with explaining that there is and should be cooperation between different FIUs of different countries so that information, evidence regarding money laundering and terrorist financing activities can be shared through the creation of mutual legal assistance or being a part of an international group like Egmont Group. The information should be shared so that it will be helpful to catch criminals and terrorists who think that they can escape from law by doing crime in one country and taking refuge in another. This section further puts lights on three main functions of FIU, that is, collection of STR from financial institutions, analyzing them, and communicating to law enforcement. In this way, FIU is an intelligence unit that deals with processing information for the requirement of law enforcement. There are also some recommendations from FATF which suggest what should activities of FIU include. This section also introduces different FIUs like FinCEN, OSTRAC, and their working mechanism.